Over to you, Paresh, sir.
Hello, good evening, good morning, good afternoon, everyone, depending on the time zone where you are. Thank you very much for joining us today. I heartily welcome you to another episode of In Conversation With. In Conversation With is a management series by CASI Global from New York, where we invite senior management professionals from across the world and deliberate on issues in search of executable advice. My name is Paresh and I'm a member of the board of directors at CASI. We are the world's largest platform for sustainability. We have a presence across 52 countries. We also run a very large volunteering platform with a reach of over 3 million volunteers. So today's episode promises to be a very exciting one. We have two speakers, both legendary, and we have so many questions on WhatsApp and all the social medias that we are present on for both of them. This is about policy making. This is about multilateral agreements. This is about stock exchanges, who, what, all, every company, every broker, everyone is connected to exchanges and policymakers. In fact, I remember from my days as a CEO of a bank, whenever there was an agreement, a multilateral agreement, or a circular from a stock exchange, and then we said, okay, tomorrow onwards, I have to do this. So we used to start doing it as a CEO of a bank, and then as a CEO of a broking company, life was the same. We get to know that, okay, there has been a multilateral agreement on this, and so now and then we so many questions. My first question is directed to Kishan Kumarji. Kishan Kumar sir, thank you very much for joining us today from Trinidad and Tobago. You're the head of multilateral environment agreements for the Ministry of Planning. So I have a very basic question. My question is, how is a multilateral agreement initiated? Who actually initiates it?
Thank you very much. But first, before I answer, let me say thank you to CASI for this privilege and honor for joining this August forum. I think your reputation precedes you, so it's indeed an honor to be here and to be invited to speak a bit on multilateral environmental agreements and more broadly on some of the issues that will affect ESG investing in the future. So to answer your question, of course, the first and fundamental recognition that initiates a multilateral environmental agreement is that there is something to be addressed by multilateral environmental agreements. And by virtue of its name, multilateral means involving many parties as opposed to bilateral. So usually this could be done on a global scale, or it can be done on a regional scale, depending on the scale of the problem that there is agreement from governments to address. So it's usually public based in terms of governments and intergovernmental engagement and agreement. So let me use climate change as the example, because this is what we'll be talking about in any event. Way back in as far back as 1979, scientists started to make the link between carbon dioxide emissions, fossil fuel combustion, and a changing climate as a result of emissions and increasing greenhouse gas concentrations in the atmosphere. Of course, there used to be a divide between science and policy, and linking that science policy interface was challenging because it was seen as two different communities. But climate change, for example, brought these two communities closer together over the years, and it was at the UN in 1989 that it was recognized that something had to be done about climate change, because it was recognized as a common concern of mankind, of humankind, and therefore countries of the world at the UN resolved to negotiate a framework convention to address this issue, because it recognized that no one country can solve the problem, because every country is contributing to the problem and every country will be impacted by the problem. And therefore, multilateral approaches are necessary in cases like this. So the UN recognized it. It passed a resolution for governments to come together to negotiate a treaty and establishes the processes. These are fairly well established under international international law by virtue of the Convention on Treaties, or the Law of Treaties, the Vienna Convention on the Law of Treaties, and how treaties are established and how they're negotiated and so on. So governments get together, they negotiate their interests, and they compromise, and they adopt an instrument. Usually it's legally binding, and then they move on to implementation. In the case of climate change, it was a framework agreement, the United Nations Framework Convention on Climate Change, and then later on, which was adopted in 1994, and later on, it gave rise to two daughter protocols, the Kyoto Protocol in 1997, and more recently the Paris Agreement in 2015, which are themselves multilateral environmental agreements. And therefore, governments are now, continue to negotiate on how to implement these. So this is the process through which international lawmaking is done, particularly in the context of multilateral environmental agreements. I hope I answered the question.
Oh yes, absolutely, sir. Sir, one small question again. When a multilateral agreement is tabled before signing, does it include trade agreements also? Because trade is the survival of a country. And in terms of climate change multinational agreements, there are so many of them. There are so many things which we hear that trade was not taken into account, or trade played a very heavy role in this multilateral agreement, and so it was biased. So how does it happen really? Where does trade figure out in this multilateral agreement?
But it all depends on the thematic area that is being covered. So in some cases, trade may not feature prominently, but the agreement itself may have trade implications. In the case of climate change, or generally how trade issues are reflected, depends on how governments bring those issues to the negotiating table and how they're reflected in the instrument eventually. In the case of climate change, trade played a heavy part, because then what was being targeted was fossil fuels, in terms of the combustion as the main culprits for increased greenhouse gases in the atmosphere. And the countries that are oil producers, including Trinidad and Tobago, saw the issues with reducing fossil fuel, because foreign exchange earnings, for example, are critical to a country, as we know, for well-being. And if those earnings are based on a monoculture, where you have, for example, only oil or gas or petrochemicals or heavy carbon-intensive industries, then addressing those would become an issue of concern in terms of how it is being addressed and how it is reflected in the instrument. And therefore, you have the trade issues, while not the initial focus of the agreement, comes into play depending on how the issues are negotiated and how they are envisioned to be implemented. And therefore, trade invariably pervades most of these conventions, because it has an interplay on intergovernmental relations and diplomacy, and therefore governments trade with each other, countries trade with each other, and therefore the significance to which it features again will depend on the issue that is being negotiated.
Thank you very much for that. Could we of course have a lot of follow-up questions, sir, but could we have a look at your presentation for us, sir?
Are you all seeing it?
Yes, sir.
Visible? Okay, great. Thank you very much. So my presentation I've taken the slant of looking at public policy and ESG broadly, but more narrowly from the perspective of international and intergovernmental arrangements and MEAs, and how public policy flows from that, and what are the possible implications for markets, for industry, and ESG generally going forward. So basically, I'm looking at two instruments or two set of agreements that has framed the global policy framework largely for environmental issues. And these are the Paris Agreement and the Sustainable Development Goals, both of which were adopted in 2015, the Sustainable Development Goals, or the SDGs as they are known, was adopted in September, I think it was, and Paris Agreement, of course, in December. And they are largely intertwined and related. Of course, the Sustainable Development Goals is a work in progress, much like the Paris Agreement, evolving over time to address issues as they arise within the broader framework of sustainability and sustainable development. Of course, we are all familiar with the Sustainable Development Goals, and if there is any international framework that addresses ESG head-on, it would have to be the 17 goals of the SDGs, because it ranges from issues that are directly social, such as poverty and hunger and good health, to environmental, such as clean water, clean energy, climate change, and as well to governance, looking at peace and justice, and so on. So reducing inequality and so on. So it spans the range of issues that are usually covered when looking at ESG issues. And therefore, the Sustainable Development Goals, if there was any framework that accurately represents or is representative of ESG issues, I think the SDGs would be those. Of course, the other one is the Paris Agreement, adopted in 2015, where countries have agreed to hold the increase in global average temperature to well below 2 degrees above pre-industrial times, with efforts to further constrain to 1.5 degrees Celsius above pre-industrial times, and to reach net zero global emissions in the second half of the century, meaning then that the first stop would be in 2050. So there are various dimensions to the Paris Agreement, drawing on what was agreed earlier in terms of sustainable development. And the objectives, and if you look at the preamble of the Paris Agreement, it is much broader than the instruments that preceded it, such as the Climate Change Agreement, the Framework Convention itself, and the Kyoto Protocol. So there are various dimensions now to the Paris Agreement that speak more directly to sustainability. So there's the environmental dimension, of course, which aims primarily to reducing carbon dioxide emissions, which is an environmental issue, which is the cause of climate change and global warming. And to do that, governments have agreed to build an emissions trajectory to net zero by devising and formulating national climate plans, which are to be improved every 5 years. And this policy perspective from an international lens has sent a clear and unequivocal signal to the market that thriving and transition to a clean economy is now perhaps inevitable, irreversible, and irresistible when you look at some of the benefits to be had. There's also the social dimension of the Paris Agreement that looks at just transition of the workforce for decent work for all, because there's a recognition that in transitioning from a carbon-intensive economy to net zero and low-carbon economy, there would be potential employment fallout based on transitioning the jobs that are carbon-intensive to those that are not as carbon-intensive, or to more sustainable jobs, or greener jobs as they are called. It speaks to creation of decent work and quality jobs, which are high-paying, good-paying jobs to afford a good quality of life for average citizens. It speaks to promoting and consideration of obligations to human rights, such as the right to health. It looks at other vulnerable groups within the broader society, such as indigenous peoples, local communities, migrants, persons with disabilities, and persons in vulnerable situations. It also looks at the right to development, which is a sovereign right under broad human rights, as well as, more importantly, and evolving over time, issues related to gender equality, and more particularly the empowerment of women, and of course the underlying ever-present issue of intergenerational equity in terms of sustainability. There's also the economic dimension of the Paris Agreement that has recognized that there will be climate change impacts arising out of increasing temperatures, more frequent episodes of extreme events. And if I was looking at BBC just before joining this and learning of the floods in China, for example, the recent floods in Europe, unprecedented, the wildfires and the heat cells of the in the Western US, and the social disruption that is causing. And the climate change impacts are being recognized that to the extent that they will cause severe disruptions in global supply chains, for example, as in the availability and the production of goods and services. There will be macroeconomic effects flowing from that, such as inflation, negative growth, export losses, loss of income, and of course, which will impact on issues related to debt servicing for high indebted countries, such as those in the Caribbean, for example. What the Paris Agreement will do, therefore, is it will reshape national economies, it will reshape development plans, it will reshape the value chains for companies across the globe, as now every country, every single country, from the most far advanced developed country to the least developed island state, across that spectrum, every single country is now required to reduce their emissions and to contribute to the overall solution to climate change by contributing to the solution through these reductions of emissions. As a result of that, one of the goals of the Paris Agreement is the shifting of financial flows towards low carbon and climate resilient investment. And the private sector has recognized this as an integral part of their own operations, because they have been recognized as an integral part of the solution. So there is a clear policy signal, for example, for businesses and investors across all countries to make low emission or carbon neutral investments, whether through financing projects or through development of technology and so on. So broadly speaking, the bottom line is the recognition that building a more inclusive and resilient world is a long-term prerequisite for financial stability. And therefore, governments through public policy are now committing to providing an enabling environment for businesses and investors to accelerate the transition towards a thriving, clean, and sustainable economy. This has, of course, also given rise to concerns from a policy perspective, from a public policy perspective, from a government perspective, as there are government concerns because their businesses, their financial systems, their investment opportunities may be at risk from getting cut off from now what are enhanced direction in enhanced global capital flows. And some assets will become increasingly costly to finance, such as fossil fuel industry and those economies with monocultures, as we call them, would be at risk. Issues related to investment compatible environment is also a concern for governments, and therefore attracting investment related to economic growth and maintaining a competitive edge in terms of export is something that that is now taking center stage as a concern for governments. And they are now moving towards creating the frameworks or the necessary enabling environment that would enable this kind of investment and attracting investment, and therefore issues related to legislation and regulations, to procurement, to transparent procurement, anti-corruption measures, transparency. The social impacts of investment is a critical part now of most environmental impact assessments for new investments, for new projects, where the social dimension is featured side by side along with the environmental impact assessment. And therefore now we are seeing that public policies is aligning globally with the 1.5 degrees Celsius target of the Paris Agreement. And this is backed up, of course, by science. The Intergovernmental Panel on Climate Change. Science remains an underpinning driver of policy in the climate change context. And therefore, the Intergovernmental Panel on Climate Change has estimated to reach that net zero objective in the second half of the century, that there needs to be a rate of decarbonization of approximately 7% year on year. We are seeing some countries now taking action, domestic action. The EU, for example, and only a few days ago, there was an indication from the US that border carbon taxes may be considered, where there would be a tariff placed on products from countries that have a high carbon footprint. Countries are now looking at domestic carbon prices and taxes to leverage finance to incentivize industry and markets to reduce their carbon footprint. And part of all of this now forms the reporting framework, the international reporting framework, because all countries would now have to report on their emissions in a transparent way. The negotiations are still ongoing, and hopefully they will be adopted in the next conference of the parties in Glasgow. But greenhouse gas reporting would now also be likely to be mandatory in domestic policy frameworks, where companies and industries would have to report transparently on their greenhouse gas emissions according to some protocols. And this, of course, will give rise to disclosure reporting and to contribute to international transparency reporting. And there has been, suggestions or arguments. Well, if businesses and industry would now be required for disclosure of this, why shouldn't governments do the same in terms of their own disclosure and creating the transparent window through which their own ESG development and frameworks can also be scrutinized? And this is also happening under the reporting requirements of the Paris Agreement. Governments are also invited to report on their SDG achievement as well. So we are seeing two aspects of this transparency reporting, both from greenhouse gas emissions and measures being taken to reduce, carbon footprints at the private sector level and as well at the national and intergovernmental level. We are also seeing, policy frameworks being directed towards green investment, incentivizing green investments. For example, stimulus packages are now being formulated. The Biden administration is a typical example of what is now happening with some degree of acceleration. Various regulations to look at green investments. What are called positive subsidies as opposed to perverse subsidies and incentives to reduce fossil fuel use or to discourage fossil fuel use. Looking at green bonds, government bonds, and how they can contribute to leveraging financing for climate action is also part of the public policy drivers that are now being pursued. And of course, government bonds, for it to be attractive, would also now, in the context of ESG, have to demonstrate that they also subscribe to the broad principles of environmental, social, and governance issues under what we refer to as the normative expectations. Of course, these public policy approaches will have some impact on corporate culture, as we're already seeing. So how does corporate culture now, having been recognized as a key player in achieving net zero by 2050, how does it contribute to that net zero? It is likely, therefore, that ESG ratings will become as important as credit ratings in global corporate assessments for competitiveness and so on. Whereas lower ratings are likely to be more costly because it will highlight exposure to climate transition risks, physical risks, and under exposure to opportunities and so on. So it is likely that ESG investing would be the norm going forward and be guided by public policy in alignment with the net zero objectives of the Paris Agreement. Because companies with less carbon footprint would likely to have a lesser regulatory risk in countries in which they operate. And also their shares and their share value would likely be less volatile over time. And we've seen, for example, consumer behavior that are now also aligning with ESG requirements. We've seen, for example, in recent time, the stakeholders and investor demands of Shell, Chevron, and Exxon, for example, shifting their focus now to more climate-friendly action. And we're also seeing that courts, the legal system is also upholding public policy in terms of aligning with climate change, as we've seen with Shell, for example, recently. So therefore, it is likely that ESG activists demanding more of the companies in which they invest in will be likely the norm going forward. And what we've seen from Shell, Chevron, and Exxon in quick succession it may be a sign of things to come in terms of likely behavior. So the challenges that the corporate culture would have to be faced in going forward, from my perspective, would be, of course, virtue signaling versus greenwashing versus compliant reporting, and heading towards a convergence of more established ESG assets. And the challenge, of course, would be how to improve stakeholder outcome without compromising shareholder value. So therefore, it is likely that strong government and public policy would be required to incentivize companies and businesses to transform to more sustainable paradigms and therefore catalyze ESG-related assets, as there is a risk that the increased capital flows from the bottom through this redirection of capital flows without a policy framework from the top, a public policy framework, without a proper alignment, is likely to be a chaotic transition if not managed properly. And we could expect as well that a transitioning from what we understand as CSR, corporate social responsibility, to ESG and investor confidence would more likely now become catalyzed. Although there is still a blurred line between the CSR and ESG in some schools of thought. So this, we think, well, at least from my perspective, I think is what is likely to happen, as we've seen evidence of this already taking place and going forward, and how ESG can now play a more critical role in enhancing competitiveness, investor confidence, increasing market share, for example, and all aligned with a sustainable future in which investors and financial systems can flourish. And that is the end of my presentation. Thank you very much. I can stop sharing now.
Thank you very much, Kishan ji, for that presentation. A quick query. Now we work across 52 countries. So we work with hundreds, if not thousands of corporates. And we work with a lot of mining companies, cement companies, manufacturing conglomerates. So usually the answer is we lack finance. You see, so to redo a supply chain of a large cement company, to redo the supply chain of any manufacturing company, we need a lot of finance. Now that is where we get stuck, and we don't see governments coming together to work on this issue. So while multilateral agreements are for climate or specific issues, nobody is really touching upon that. Look, can we help this country and the corporates in this country to raise funds? Because there are a lot of countries which depend on natural resources. India for one, Trinidad and Tobago for one. It's basically a natural resource country, and that is how progress was made. And so there is a lack of funds, and we get stuck. So while we want to do good, large corporates want to do good, they need to do good, but there is a lack of funds. So in your personal opinion, how can this be addressed?
Well, finance is always an issue, and it is actually the center stage of the negotiations under the climate change agreements in the Paris Agreement, for example. In Copenhagen in 2009, and which was confirmed in 2010, there was a pledge to enhance climate finance to $100 billion per year by 2020. With an agreement to renegotiate or to agree on a new goal by 2025. Needless to say, those climate finance obligations or pledges have not been met. Mm-hmm. And therefore, bridging the gap between finance availability and finance accessibility and the demand for transitioning, again, has to align. And this is where the top-up or the top-down and the bottom-up policy alignment has to come, so that you don't get a chaotic transition. So if COP26 being hosted by the UK, being billed as a COP of ambition, not only for reducing greenhouse gases, but for raising finance for developing countries in particular to enable them to transition to low carbon economies. Even if those pledges were to be realized and we have increased financial flows, hopefully, then the alignment with that groundswell of capital flow now has to collide with a domestic policy framework, not only from a public policy perspective, but also from a private sector transitioning perspective in terms of remodeling the business paradigm towards a greener transition. So whether it's a cement company, as you have cited, or petrochemical company, ammonia plant, or methanol plants like we have here in Trinidad and Tobago, that transition will now have to be given more thought, and how the finance flows can now be effectively and efficiently utilized. So we're hearing things, for example, like green hydrogen. And we are now right here in Trinidad and Tobago exploring green hydrogen, where you electrolyze water and you produce hydrogen for the production of ammonia and urea and methanol and so on, rather than using a natural gas stock base. So that there has to be some acceptance at some point in the future that some of these natural resources may become stranded assets. That it will be more costly to explore them than to actually develop alternative industries, such as, for example, green hydrogen. So the transition has to take place from both the top down, and the bottom up, in terms of redirecting business models. And this is what this is why I say that ESG investing and building the ESG asset base of companies would become more and more critical to attract some of that financial flows, because it is unlikely that investors will invest in dirty, for want of a better word, or more polluting industries. So there has to be alignment from various angles towards the common goal of this energy transition.
Correct. Thank you very much for that, sir. If you recollect, the last conversation we had was when I was telling you about our future plans of setting up an ESG exchange to trade impact bonds. So this topic is very close to our heart. We think it is the next big thing, and the world warrants such an exchange. So it's not that we want to do it. Of course, we want to do it, but we feel that the circumstances warrant an exchange to trade impact bonds and related things. More of this later. Let's go on to Shankar Jadhav ji from Bombay Stock Exchange and have his views on sustainability. But before that, let me take a minute and acknowledge Nimet, a young researcher from Turkey. Thank you, Nimet, for being here. Wanda, a very close friend from Poland. Thank you, Wanda, for being here. Professor Veena, a lawyer and a professor, and Subhash ji. Subhash ji is the joint director for income tax. Thank you all for being here today. Thank you very much. Over to you, Shankar ji. Please tell us your opinion and views on sustainability from the stock exchange point of view.
I think he's muted.
Hey, Shankar ji? Yeah, brother.
Good evening to all of you. Thank you, Paresh ji, for calling me on this platform, and to Kishan Kumarsingh for joining us at this time, and to all of us who are listening and you are looking at us at this time. I am from BSc, and as you all are aware, that listed companies, which are the giant corporates, which are going to take the front line to not only generate the funds, but also to have technological solutions, etc. And in India, we are looking at sustainability in a very big way. As you know, that the Honorable Prime Minister has also is all leading the country to be on track to meet the nationally determined contributions NDCs by 2030. We have signed the Paris Agreement, and we have done lots of projects like Swachh Bharat or the Indian National Solar Mission, where we are expected to put 450 gigawatts of renewable energy and use it. In fact, we have also done lots of international work, like we have set up an international solar alliance, and we are trying to get the funds and set up the infrastructure for this. So as we can see, the political will seems to be there. And it is estimated that over $200 billion may be required to meet these goals over a period of time. And this cannot be done in isolation. You require platforms which gather the funds, collect and distribute it efficiently, and make sure that they are used for the things that are required to be done. So this requires lots of coordinated approaches with the central government, with the state government, and other such entities, including banking and financial activities. We have good regulators like SEBI, IRDA, PFRDA, RBI, which we have, as you are aware, that we've got something called Business Responsibility Report till now for the top 500 companies in India. And this will be, this has already been extended to the top 1,000 companies. And they've also changed the format to just, instead of business BRR, they have made it reporting for sustainability also mandatory. And if you see the columns and the details required, these are very useful to understand what we are doing and helps us in execution. BSE has also been in the forefront of providing funding, as Professor Paresh talked about. Like since 2015, we have got around $800 million. That's more than 5,700 crore rupees worth of green bonds have been raised on BSE debt platform. Similarly, we have an international exchange in Gift City in India. Since 2019, we have gathered funds to about $1.75 billion while listing of green bonds. Now, yes, we have done this, but we still have to go further. The government of India has also suggested the social stock exchange, but so far not much has been done. We are hoping that something will be done soon and we will look at it. It's because of COVID that maybe we have stopped. And as the UN Secretary General has said, that we may be the generation which will be the first to see that extreme poverty levels will be eradicated, and maybe the last generation to be able to prevent the catastrophic climate change. I think it is our responsibility, and as being in the forefront, we have to do quite a lot of partnerships and get together with people. Let me also highlight some of the points that BSE has done. We have indices since long. We have a carbon disclosure project. We have BSE Carbon X, Green X that's going on. We've also got a SPDJI 100 ESG index, which tracks the work related to companies that are doing good on the ESG side, as well as the funds. As you may be aware, over the last 2 years or so, or rather 3 years, we have quadrupled the funds that are coming, and we have gathered around rupees 120 billion worth of funds for the ESG funds. Most of them are active funds, only one is a passive fund, but that's one more addition. As you also may be aware, since 2011, we've got around 52 unicorns in India. In fact, some 16 unicorns were funded last year, in 1 year alone, to come to the unicorn status. But there is one thing that we are missing there. There is only one lady CEO or one fund, one unicorn with a lady CEO. I believe that gender inequality will be a major stress that we can go ahead with. In fact, the amount of money coming into India is a huge amount, even in startups. We've gathered around $12 billion or so in the last 1 year. Besides that, one more thing that we have to see is the manufacturing practices in India. They've also improving quite a lot. For instance, there is a fund called NGO called Safe in India, which is trying to go at the grassroots level and help India meet the levels that we talk about the Western world. Due to COVID, we have seen that lots of labor has suffered quite a lot. We have risen to the occasion. We have supported them either through CSR funds or others. But I think there is a massive work to be done. People will not look at ESG in isolation. We have to take forward all the goals. There are the SDGs. We cannot focus on a few on priority and neglect the others. Yes, we can prioritize, but we have to look at all of them. And I feel both BSE as well as myself and my team members are looking forward to get funds together, put forward initiatives, and make things work so that we can have projects coming up and have a sustainable development, at the same time not missing out on the development of the country, the economic development, I mean, and the growth. Because India has to come to a level of standard of living which is sustainable for the people itself. Otherwise, we will just be talking in air. Like, let's check out fuel. We import almost all our fuel. I think the government has also taken a stand that we will blend biofuels. We have to still study how it will affect the environment. But these are some of the things that we do. And I believe the renewable energy mission is likely to lead the world into how we can progress without hurting the environment adversely. If you look at some of the companies that are on the SPDGI 19 index, ESG index, you will see there are some of the manufacturing companies like in cement and other manufacturing plants. They have really done well to reduce their carbon emission or the adverse impact on the environment, and they've disclosed. In fact, disclosure is one of the most important things. We have been parts of Global Reporting Initiative, GRI, or the IR Lab, where integrated reporting is done. As they say, what you see or what you measure is what gets looked at and actioned. If you don't measure something, it will not happen. So there are two ways which BSE can be. It is in fact one of the first exchanges to be on the social, on the sustainability exchanges path. We're the first SSE. In whatever way we come together, we try and help the sustainability. But we should not look at only E. We should not look at S. We also have to look at governance. And many people do not talk about governance. And let me tell you, governance is not only corporate governance. There are many issues related to it. In fact, the metrics on governance have to be developed. We have to talk about how to measure and how to incentivize people to improve the governance. And with that, I stop here, giving the thoughts to all of us to discuss. Thank you.
Thank you, Shankarji, for that. A quick query. When you say you have $1 billion which you have raised and you are keen to invest, what exactly are you looking at? What kind of investments are we looking at here?
Actually, BSE is a stock exchange. So when we help people gather funds, we get together the people who have funds and the people who want to utilize the funds. So that is how we've got these monies on the exchange. It is not that we decide where to deploy. It is the fund manager which decides what to deploy. Most of these funds are gathered on the basis of the projects.
Or is it just a platform where you match? It's like crowdfunding.
No, BSE is a platform which is an exchange. So we match the funding requirement with the funder and the person who requires the funds.
Okay. See, our next query is from one of the viewers. I'll pose it to you. One of the foundations of a stock exchange is to increase finances. The inflow of finances, so that there is liquidity in stocks, bonds, and so on. Now, Bombay Stock Exchange is a leading player across the world. It has many accolades, many feathers in the cap as a very large exchange. Now, sustainability being something which is new, innovation is something which corporates are looking at to be more and more sustainable. So, what is Bombay Stock Exchange doing to help sustainability or inculcate the culture of sustainability in its listed companies? What are the top 2-3 things that the exchange is looking at?
So we have already given guidelines in terms of ESG guidelines for companies to look at. And it's available on a website and companies have been following it. Besides that, we have been working with our regulator and we have got the BRSR set up. The third thing that we do is we have indices which manage to check whether the company is doing well on these factors that we look at in terms of ESG. But let me also give you one point which many have missed maybe. The returns on the ESG thematic funds have been similar to those, or rather in some cases higher than those who are not ESG related. So Indian investors or worldwide investors have been looking at ESG as one of the criteria to invest. And the returns on the ESG investments have really been good. Second part is the technology wise. What we have seen as a technologist myself, what we have seen is the companies would like to be innovative and change the technologies, and in the process, they become more efficient. So earlier, the ESG or environments were adversely affected because they were not really efficient. They were getting good ROI without being efficient or without looking at the environment. Today, they do that. And one more thing that we have done is we have inculcated through CSR and otherwise, the company should try and help the local population, or rather grow along with the local population. And this is not a new concept. I think in 1877, when Tata's first developed their mill in Nagpur, for instance, since then, the corporates have taken responsibility of developing around. You can see so many instances where the local areas or the industrial clusters have been developed by the corporates themselves. What we are doing now is measuring it and putting it into a framework so that others can use the framework, others can be incentivized, and they can see the path. And we see lots of companies. For instance, one of the ways that one can look at ESG is also promoting the small and medium sector companies. So you can see BSE is one of the top leaders in the SME segment. We've got a huge number who have come, and in fact, they've also gone to the main board. These companies also are considered to be a sustainable development because they also provide human labor and
livelihood.
Other things. Yes.
Correct. Absolutely, absolutely. No, the BSE is an inspiring story, and I have always personally been a big fan of BSE. In fact, I started buying shares of BSE before it was listed. So I have those, those shares before they got split 1:12, and then again 1:2. So I
hope
been
you've got good returns with our management.
Oh, yes,
team.
yes. You guys give 400% dividend per year. And yes, we made very good returns on my portfolio. So yes, I'm thankful to you personally for that. And yes, we are a big fan. Now, at the end of the session, we have time for 4 or 5 questions. Anybody has a
Paresh,
question?
may I intervene? Thanks to your comment, but let me tell you, our current MD Ashish Chavan, who also happens to be my classmate and friend, has really led a very good team. We at BSE is a very good team. And we are all, as you know, it's not a promoter-driven structure. So we work together and have developed. And that is a role model for other corporates also to see how we can manage our corporate governance and sustain. Thank you.
No, absolutely. Ashish Bhai is a very close friend. You are aware of that. So me and Ashish Bhai go long back when I was the CEO of a broking company. Since those days, I've been visiting your exchange. So yes. I have a lot of respects for Ashish Bhai and the entire team for that. In fact, we were also supposed to be joined by somebody from your HR team, Mahendra Bhai. So Mahendra Bhai is also a close friend, Taude. He just came online, right? So thank you, Mahendra Bhai. We have time for questions. Anybody has a question?
Thank you, Paresh.
Shubhamji, Samirji, Nimit, Wanda, questions, please.
Yes, I have a question to Mr. Kumarsingh, if it's possible.
Yeah, please.
Yes. Well, hello, Mr. Kumarsingh. I'm from Istanbul, and I have a question for you. As a minister, and how do you think that the process of implementing the Paris Agreement and the SDGs can be enhanced and accelerated in the world? What do you think about it?
Thank you very much for the question. Just a minor correction, but important one. I'm not a minister, but I lead climate policy, so I interact closely with policy makers. I think fundamentally, what is required is political will at a very minimum, because everything else builds on that. All policy making builds on that. But in order to create that political will, there has to be a recognition that there are things at stake. There are economies at stake. There are risks to investments that are real as a result of not achieving the Paris objectives, because the climate change impacts are going to be very real, not only in terms of the physical impacts on infrastructure that would affect businesses, but also on the economic viability of some investments by sheer virtue of the physical impacts. There is going to be fallout from the social aspect of it as well, because if decent jobs are not created, if that transition is not done in a way that is socially acceptable, issues related to political stability, for example, can affect investments coming into the country, and therefore creating a stable investment environment. So there are many feedback loops that come back to and multiply the impact if they are not addressed in a cohesive and equitable way. So just to answer the question, in a short answer, it is political will and the recognition that a robust governance framework is required to enhance not only the activities to meet the objectives of the SDGs and the Paris Agreement, but it must be recognized that in addition to contributing to a global solution, it is enhancing your own sovereign well-being from a civil society perspective, from an economic viability perspective, from an economic growth perspective. So it can't be seen one without the next.
Thank you for that, Kishanji. Anyone else has a question? Oh, very nice. With that, we come to the end of.
Yes, I would like
yeah,
to.
Please.
I'd like to ask a question, please. So, Mr. Kishan.
Yeah, please go ahead.
Okay. I just received a mail about 2 days ago, and I was being invited to be a supporting partner for the development and guidance of the greenhouse gas protocol for the land sector and removal guidance. And it occurred to me that these processes and protocols are still in the process of being standardized. For the past 4 years, there has been a pilot testing phase, which is being led by the World Business Council for Sustainable Development and the World Resource Institute. And we were informed in the mail that by the first quarter of next year, 2022, we are going to be providing technical support for the pilot testing companies in the form of implementations, such as data and tools, trainings, group calls, and the rest. Now, it occurred to me that there still hasn't been a very cohesive, a standardized process for all these protocols in terms of greenhouse gas, especially in the land sector and removals. Now, if there are no standards, if these standards have not been optimized, how do we implement these policies that you've just talked about? Because, for example, in accounting, there's a general accounting principle everywhere in the world. It's standardized. Wherever you go, the accounting principles are the same. But for GHG inventories, technological CO2 removals, and it's still in the process of being standardized. And if it's still in the process of being standardized, how do we implement these policies you're talking about?
Okay, that's a great question. Thank you for the question. The land sector, the forestry sector and changes in land use is perhaps one of the most complicated sectors to look at in terms of standardized methodologies for estimating or accounting for greenhouse gas emissions, mainly because it is a dynamic sector, because things change all the time. The land use changes all the time. It goes from forested land to cleared land for agriculture, and agriculture in itself is a sector that emits greenhouse gases. It goes from forested sectors to housing sector, for example. And because of that dynamic nature of it, you would imagine that it becomes a little bit country specific in terms of what takes place at the country level based on broad development policies. Now, there is a standard methodology for estimating emissions from the land sector, which has been developed and which is used by countries, and that is the methodology that has been developed by the Intergovernmental Panel on Climate Change, because it is a comparable methodology. Countries have used it. But as with all methodologies, there are various assumptions that have to be taken into account, and there are various tiers of granularity based on data availability and data collection protocol, as you have alluded to. So you may have tier 1, tier 2, tier 3. The higher the tier, the more granular your data collection protocol would be, and therefore the more confidence and certainty you would have in your data and therefore in your inventory. Similarly, to get quality greenhouse gas estimates from any sector, and particularly in the land sector, issues related to the emission factors, what emission factors you use in a change in landscape, because you would imagine that if you have a change in land use, if you have a forest fire, for example, not all the same species will grow back. You would have a succession of species. You'll have different species coming in. You'll have secondary growth, and the amount of carbon dioxide that secondary growth will take in will not be the same as what was there before. But so there are assumptions that you take into account, and therefore data collection protocols will have to be retweaked and refined on a continuous basis, and therefore government policy in terms of regulating land use, in terms of designating areas as conservation or protected areas, will come into play in terms of getting some kind of standardized referencing for greenhouse gas inventory. It is not as straightforward as, for example, a cement plant or iron steel company where the emissions are fixed. So if you have an ammonia plant, for example, you know that you take, for the chemists among us, you take a fixed number of moles of nitrogen and you combine it with hydrogen and you get ammonia, and so on. So that is fixed, and emissions outgoing from that is fixed. In a dynamic sector such as the land and the associated issues with land use changes, including for agriculture, where you have superimposed another layer of greenhouse gas emissions from a sector that has now replaced the land sector, you would imagine that methodologies will have to be continuously refined and defined as you go forward. Data collection protocols will have to be refined and defined in order to reach the highest tier levels. And I think Shankarji did mention that you cannot manage what you cannot measure. And therefore, government policy to manage land use and the land use sector in terms of managing the emissions will have to be premised on an approach to actually get a good idea of what those emissions are and what are the drivers for those changes in the land use sector. So it's a work in progress, but there is a standard methodology that has been developed by the Intergovernmental Panel on Climate Change, but that is not the methodology. There are many other methodologies for estimating greenhouse gas emissions from land use that are comparable, and in some instances would have better confidence levels because of the data collection protocols and so on. So I trust I would have answered the question.
Thank you, Kishan.
Thank you for that, sir. Patrick, you have a question, please.
Yeah, I have lots of questions. I get confused which one I should go for, but the question kind of related to the previous thing is, I was thinking about when I heard about the ESG reporting in the stock markets, that the reporting is increasing and a lot more companies are doing this. Are the stock markets doing anything to evaluate the quality of these reports? I mean, if you look at financial data, you have credit ratings, and there's been lots of episodes historically where credit ratings look great, and then suddenly you found out that they were not so good. So that was happening even with financial data, and it still happens with balance sheets that are kind of manipulated by companies until the manipulation doesn't work anymore. And you can assume that companies will try to do the same thing with ESG reports and data. So what can the stock markets do to evaluate that, and what is being done?
Shankarji, would you like to handle that, please?
Yeah, I will. Sorry. Thank you,
No one
Patrick, for
wants
asking
one.
that question. You have a genuine concern where, people reporting the transparency and disclosure quality may be difficult to attain in various places. But let me talk to you about SEBI. It's one of those successful regulators which has taken its time and ensured that slowly but surely we have come to a level of transparency where Indian stock markets, the capital markets are completely digitalized. You may be aware that we have everything on dematerialized side. All the share markets, all transactions are online, etc. So SEBI is a slow and steady regulator. And what I find interesting, and it's a very good thing, that they started first with a smaller set of companies and easy data to be collected. And slowly they moved on over the years, and the new structure that they've given also is amenable to more disclosures, more transparency. What they've also taken into account is a finance company, for instance, requires a different set of data versus a, say, steel or cement or manufacturing company. So these changes they make, and I'm sure over a period of time you'll see very good quality data. One more thing I would like to say is BSE has been on the forefront even in that part where data was not transparent enough or not in machine readable form. So BSE has pioneered that we start using XBRL. We got the regulator also to say. So we have got machine readable format data that is given by the companies, and it goes like our share market transactions also are very fast. They are less than 6 microseconds. The latency between the reports that we receive from our corporates is directly, automatically gone to the website of BSE and other places. So we have good quality reports, and I'm sure those quality reports also will improve. The only problem that we see, like, if you're a financial company, how do you talk about the environment data? You don't pollute the environment directly. But yes, the data centers and the compliance requirement that you have a backup and a near DR, etc., also complicate the matters. So there are some issues that you take care of. And the question regarding the quality or the authenticity of data, let me tell you, in the financial part also, the data is authenticated to the extent that in India, the transactions are all reported truly. There might be some transactions which are incorrectly reported or maybe even downright fake, like they find out in some GST transactions, but that is very minuscule. Most of the time, the only issue is, and I teach lots of MBA students or I talk in finance platforms, I see people look at balance sheets and profit and loss accounts, but not at, say, for instance, cash flows and other details or the director's reports for all the kind of data that you are looking at. The director's report normally conceals lots of data which you can look and analyze. I hope that answers the question.
Yes, thank you. Thank you very much.
Thank you, Shankarji, for that. With that, we come to the end of our session. It has been a wonderful session, lots of learnings. And yes, we realized miles to go before I sleep kind of a situation. So I can see Kishanji smiling and Shankarji smiling. So yes, there's lots to be done on policies and lots to be done on ESG on both the sides, from the government side and the exchange side, and yes, the corporates also. So thank you all very much for being here. This is Paresh. Thank you very much. Thank you.
Thank you.